Alright folks, well I hope that everybody had a great 3-day weekend from the stock market. Maybe you had a nice Easter with the family. Well now it's time to shove the family to the side and get ready for the stock market. Truth be told, when the market opens, there's a whole nother family that you have to please. Like overachieving girlfriend Mara, who gives you a lot but also demands a lot in return. Likely your sanity. Brother Palantir, who everybody knows is going places. But because he's not the baby of the family, no one seems to care. He could solve world hunger and the chart would show down 1.5%. Don't forget about niece Neo either. She's got a chip on her shoulder. Well, rather a lack of chips on her shoulder as she struggles with the global chip shortage, but you know she's good for it. Sammy's son W, always climbing up on roofs and staring at the sun. What is wrong with that kid? Younger brother Skills is shy and just wants to sit at home and game. Uncle Lordstown is a bit of a doofus, but you know he means well. Though he always gets himself into legal issues in one way or the other. Tammy Tilray, don't get me started on Tammy Tilray. She always has her head in the clouds. That's all I'm gonna say about Tammy Tilray. And of course, one can't forget Grandma Kathy, always keeping us in shape. Anyways, folks, in this video, we're going to be talking about the top 3 stocks for this week. And first, we're going to start with the biggest updates and some of our recaps from last week. In terms of briefing plays, UPC was very fun Thursday morning. It had this consistent pump and dump formation throughout the pre-market. So I said in the briefing, getting pumped again this morning despite a lack of news. Any new pumping after open, and we did indeed get a very nice pumping with a massive rally. But the learning lesson here is that if you see these consistent pumping formations, that's obviously not a stock that you buy and hold. Why do you believe in the stock over the long term? Well, because of pumping, Charlie. No, it's nothing like that. Pumping is something that we can take advantage of for short-term trades, but nothing else. You see consistent pumping formations in the pre-market when there's like no volume. What's going to happen when the market opens? Well, tons of volume is going to pour in. What does that mean? Well, that means more likely to get pumped at open. And that's exactly what happened here, but you have to get in and you get out. In terms of charging station plays, those performed very, very well last week. ChargePoint was the biggest winner on Thursday. SunW also very well. These are two that we talked a decent amount when they were dipping. We said, make sure that you're averaging down on these. Make sure that you're taking good dip buys. But bigger picture, these are plays that are obviously going to be huge benefactors of the Biden infrastructure proposal. A proposal that's going to be debated probably over the next couple of months. So the key with these is keeping your eye on the ball. Okay, NEO and XPEF, so they both beat delivery expectations Thursday morning. This was, of course, amidst a global chip shortage and a pretty bad environment for EVs. Why did they beat? Well, in NEO's case, they had downgraded their expectations, and NEO always likes to under-promise and over-deliver, so they were able to beat their lowered expectations. That being said, this massive chip shortage isn't a joke. These companies are definitely going to have a hard time producing, but showing very positive delivery numbers is a great sign for what they're going to be doing when the supply chain issues stop. XPEF did extremely well, reporting a 384% increase year over year and 130% over the previous month. This is largely because they've been growing their brand reputation. They're investing in supercharging networks and have a pretty damn decent product portfolio. I'm extremely excited about these plays, but I think it's going to be tough for the next couple of months as they deal with the shortage. However, I would not bet against these plays. They're going to be huge winners, especially as we end the year. Okay, well that is it for the recaps. Oof, long weekend. I got to get some more tea. Now it's time that we get into our top 3 stocks for this week, and the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Also, this video is sponsored by ZipTrader U. If you'd like to learn how to trade with our step-by-step lessons, would like access to our daily morning briefings, as well as our price targets and private chat, well, we do offer a program for that, and I'll put the link below. Truth be told, ZipTrader U is sort of like a structured exercise program. Much like a workout program or a diet, it's very easy to fall off the wagon if you don't even have a structure that you're employing. But it's also similar to a workout program in the sense that if you don't put effort into it, you're not going to get much out of it. So if you're going to join us at ZipTrader U, take some time to read about what we offer, think about whether or not you're going to be putting that work in, and then you can decide whether to join us. Okay, first stock, Crowdstrike, the strike of the crowd, CRWD. So CRWD is an American cybersecurity company. Cybersecurity companies as a whole have performed pretty damn bad this year, largely because the market has been punishing tech stocks and rewarding old school plays. But of course, just because the market hasn't valued these companies properly doesn't make them any less inherently valuable. In fact, I'd argue that Crowdstrike's cybersecurity service is more valuable than ever. And just over the weekend, we saw a reminder of how important cybersecurity stocks are, with massive data breaches from Facebook, as well as a massive data breach from the University of California system, which I think might affect me personally because I went to UCSC. Our mascot is the banana slug. Don't believe me? Look it up. The point is, the call for cybersecurity is greater than ever. Every year, technology basically intrudes farther and farther and farther into our lives, which means that hackers also can intrude farther and farther and farther into our lives. Yet at the same time, the leader in cybersecurity is down massively. So for me, CrowdStrike is looking like a very good deal right now. It's also true that the last couple hacking catalysts have historically benefited stocks like Crowdstrike very well. Crowdstrike also has an investor briefing on April 8th, which is this upcoming Thursday. So this is definitely going to be a very important week for them. If you look at their recent earnings date in March, almost every reported metric for the fourth quarter is up dramatically. Revenue as a whole, annual recurring revenue, subscription gross margin, losses are down, cash flow is up. So in terms of taking a good entry, well, it depends on your time scale. If you're long-term and you just want to buy this and forget, I honestly don't think you can go wrong if you have a long-term time horizon and you buy it under $200. I think this is an insane play. If you're a little bit more on the short-term to medium-term side, I would say let's get this before it pops above 190. That gives us ample upside to our ZipTrader price target at 240, but I would say this also deserves a long-term play as well. Not just short-term, but also long-term. In the short-term, it's definitely very undervalued. In the long term, this has a lot farther to grow above all-time highs. You can doubt tech all you want, but the truth is that we need companies like Crowdstrike to protect us. Okay, second, charging station plays. So let's be real, clean energy and EVs specifically have been one of the biggest hits of the overall tech crunch. But they're also going to be some of the biggest winners under Biden's new infrastructure proposal. So I want to go ahead and remind you of ChargePoint and Blink. Both experienced a massive rally as Biden has started pushing his infrastructure program, but I see a short-term dip coming this week. Very rarely do you get this sort of clean run that doesn't end in a very strong dip on these plays specifically. If you look at the past, that's been true. You get a lot of people buying news and then you get a cool off, and that gives you the ability to get a good entry price. So if you're not in this already, I want to say you want to snap this up below fair value on the RSI, somewhere under $25 in share price, and then ride out the trend as the infrastructure bill is debated. And I see this as a pretty damn good deal at that $25 range. In terms of Blink, a little bit more, $32, $33. I see that as a fair deal if you want to snap that up. Get the good deal and then ride out the wave. Okay, now in terms of the last stock of the day and the requested ticker of the day, Ideonomics. Now we have been talking about IDEX for a while, and I've also publicly disclosed my ZipTrader price target at about $556, and we have done oodles and poodles of breakdowns on this play. But if you haven't gotten the chance to watch those, well, IDEX, aka Ideonomics, is a company that has a myriad of strategic investments in EVs, EV solutions, and some new age fintech. This is all based on a business model that they are calling the sales to financing to charging strategy, where you basically create a whole ecosystem where people rely on you for the vehicle and battery sales, they rely on you for financing, leasing, and insuring those vehicles, and then of course they rely on you for the charging aspect as well. They've acquired companies like SolarWreck, Tree Electric, Medici Motor Works. Just this last month, they acquired an interest in a Italian electric motorcycle company. People often talk about the explosive growth in the electric car market, but they don't often talk about the explosive growth in the electric motorcycle market, and they're also getting exposure to that as well. They also have Wave, which is their wireless charging technology. And that's sort of a summary of what Ideonomics does, but the reason they're top stock right now is because of what they dropped and told us on Wednesday and Thursday. Basically, they reported a knockout 2020, each quarter beating the last in revenue and gross profit. Ideonomics has a history of being all across the board with investments, and that's something that I've been critical of for quite a while. But this earnings report shows that Ideonomics is doing really well in terms of EVs and EV charging specifically. The earnings report essentially shows that they are continuing to gain traction in the EV industry. For example, EV revenue in 2020 was $19.5 million, whereas EV revenue in 2019 was only a paltry $2.7 million. That's a 600% increase. And because their business model is an EV ecosystem, the more sales they can get, the more exponential their growth becomes. And Ideonomics sat at a $166 million cash position at the end of 2020. But now, just a few months into 2021, they are in a much better cash position than they even ended 2020 on. In fact, they're at $330 million, which means more capital to invest and acquire good companies. And you put that to scale, well, the market cap of IDEX is only $1.17 billion. So it's almost like 25 to 30% of the company. The market cap of the company is just straight up cash. So you're not paying too much of a premium for a lot of the companies that IDEX already has a stake in, as well as the cash that's in IDEX. But if I was to highlight two things that I really liked from their earnings report, it would be number one, the strongest sector of Ideonomics right now is their charging systems. And number two, these charging systems are expected to grow dramatically. So they're basically providing positive guidance in a field that they've already developed a pretty proven track record for in 2020. And because they have the capital on hand that we talked about, it seems very likely that they're going to be able to achieve their growth goals. Now in terms of the chart, let's be honest. If IDEX was trading at like all-time highs or at my price target already, I'd say, you know what? This could definitely have more potential to run, but there's just better deals elsewhere. But because it's trading way down here, I'm a lot more excited about it. Price looks very, very favorable for what it offers, at least in my opinion. Let me know what you guys think down below. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us in ZipTrader Circle. If you'd like to learn how to trade, would like access to our price targets, private chat, and of course, daily morning briefings, well, go ahead and click the link below to ZipTrader U and check out what we offer. If you're wondering what broker to trade these stocks on and would like some free stocks, well, go ahead and click the link to Webull below. They are an excellent broker and they offer a lot of scanning capabilities and things that are very useful for new traders and intermediate traders alike. So if that's something that interests you, I'll put the link below. Anyways, folks, that caps off the video and I'll see you in the next one.